So today I have a different style of video for you all. I'm going to go through the Cheddarflow Twitter account. I'm going to look at the most unusual prints from last week. I'm going to find the most unusual one, and then I'm going to develop a trade thesis to trade this week. So it's valid for the entire week ahead. I'm going to go through and trade it. So if that sounds good to you, let's hop into it right away. For example, here, there are a variety of different prints that we saw last week. And for the record, some people have a difficulty understanding this, but if there's an unusual print that the Cheddarflow account tweets, it doesn't mean that it's automatically something that you should enter. That should be self-explanatory, but for some reason that doesn't seem to be the case. A perfect example of this is the AVGO print that's right in front of me. You also could say here the Tesla and SLV. Both of these are super unusual prints because they have a lot of premium behind them. For example, here the AVGO you could see is 225 strikes, so about at the money, and then it also was above the ask for February. That's very unusual, but this is just one variable among many in my personal trade thesis. And therefore, even if it's unusual, it doesn't mean that I have to go through and enter a setup just because this was tweeted out. Again, should be obvious to most people, but in case it wasn't for you, just because this is posted on the account doesn't mean I'm adding that position. I need to look at other things like the chart up here. And if it doesn't fit my criteria, then I'm not going to take that setup and I'm going to find a different one. So with that being said, that's what I'm going to do today, just based on prints we saw last week. And as I scroll down here, the first thing that I'm going to notice is, are there continuous prints for a similar ticker? And what I mean by that is, for example, here, the SPY flow filtered above $1 million bearish for today. That's good to see that there was 3 orders. It's not a singular order. Singular order can be unusual, but in terms of order flow, you just don't know. There's no context behind that order. It could be a hedge. It doesn't have to be directional. But when you see 3 in a row like this, that is a good sign. So this is one that I'd flag as being unusual and I'd look into a bit more. And I'll go back to this one a little bit later in this video. So as we start to look for some more over here, this is continuous AVGO. We saw that print earlier at the start of this video. So that's a good sign that we've seen a couple of these posts, and then you could see a ton of prints here, not just one print like the 1227 one for the 210 strike. There's a variety of them for the 210 strike as well. A lot of bullish premium across the board. I like something like this. So it's not one print, it's a variety of different prints, and they're all bullish in nature here. So I also like this one. I'd consider this one to be something that I'd want to pursue a bit further, and that's exactly what I'll do here to test out if it is a feasible entry. So AVGO, we'll look at the chart here. Immediately, the first thing you'll notice is off of earnings, it had a substantial gap up. It actually closed 24% on the day, which is interesting because these orders, if we go back here, at the time that this was posted on Cheddarflow, it was 9:04 a.m. And the time that it actually hit the tape as well, or at least those initial orders from down here, we're looking at about 9:30 Eastern. So that's right after market open at 9:30. So 9:33, 9:34, etc. So this was posted on the Cheddarflow account about 25 minutes after these hit the tape. When they did hit the tape, though, this ended up being, as we go back to over here, around this time over here before the upside move. It looked like it dipped back down to retest that level, but then afterwards was just able to continue up. So in retrospect, just looking at this, which is always good to test a thesis in retrospect to see if it worked in the past, because then you can apply it to the future. In this case here, we saw a lot of those prints, those bullish prints like this over here, and we saw the one a little bit later in the session from up here as well. It would seem like there's a ton of bullish premium, and therefore that's something that I want to check the technicals on. So with this gap up over here, I'm going to look at the daily first of all. We'll go back to the daily, and we can see there is a ton of consolidation from back here. This is actually a multi-month consolidative pattern that we saw, and I could just draw that out to show you visually over here. You could see this was the resistance for about 4 tests, 1, 2, 3, and then 4. And then finally, we just broke above it after earnings with this major gap up. So whenever you have a range like this, and especially when we had the lower end over here, whenever you have a range like this, once it breaks either down or to the upside, that's where the new trend will be. It acts like a coiling spring. All of this here is building up energy till it eventually breaks out, in this case, to the upside. So there's a lot of excess power behind it. Because of that, that means that there could be a lot of excess momentum intraday after you get that breakout move, which is kind of what we saw intraday here. So going back to the 15-minute chart, we noticed that, we had a huge gap up, but it was able to hold above the level that it gapped up at. So immediately after you have these big breakaway gaps, you can mark that opening price as a level. That's always going to be the case. I can test this theory for you real time here with NVIDIA, for example. I know this one's had a lot of breakout or breakaway gaps for that matter in the past, and I'll get rid of some of these lines for you, this indicator that I have on here. But if we look for a breakaway gap in the past, This is an immediate one. Oh, look at that. Perfect. We had a breakaway gap, which is considered just to be a substantial gap up, I'll just say. And if I go over here to horizontal ray, look at this opening price. This one immediately found a support off of that and continued a lot higher. That's the exact same thing here on AVGO. If this did not hold on the 15-minute to hourly candle and it fell through, then you'd be concerned. You'd probably see this fall a lot more back into that gap. In this case, because it was able to hold that opening price, it was able to continue up. Well, of course, this is just me looking back at retrospect, right? Well, this is something we can learn from though, because I just showed you what happened on NVIDIA. I already know this going into the trading day. And if we know this going into the trading day, and we know that going back over to here, there's a lot of bullish flow on AVGO, not only just because Cheddar Flow's posting it, but also if you have access to Cheddar Flow, you can see all of these prints throughout the day, like tons of premium, $3.7 million order here for a very short-dated expiration, only about 2 weeks till expiration here for the 210 strike. These are very bullish orders off of a pretty substantial gap up. And if this holds here, we know there's a high probability it's going to continue, just like it has in the past for a ticker like NVIDIA, just like it has in the past for other tickers that have had these breakaway gaps as well. Well, that's starting to piece together a pretty robust trade thesis where I can actually trade something like this on not only an intraday, but also a swing basis. So immediately after drawing this line intraday, let's say we're all the way back early on during the session when those prints came out within the first 30 or so minutes. I know as long as it stays above 213.95 on the 15-minute to hourly candle, it's going to be subjective intraday, that it's going to continue to appreciate in price, continue to go a lot higher. So with that being said, if we were to retest this level at some point intraday, which is certainly likely to see, we've seen it in the past before, again, with something like NVIDIA, which we can base our prior knowledge off of. If we see this retest over here, I can add on that retest on this level, and a decisive 15-minute to hourly candle close below would invalidate this setup. As long as it holds above, then we can see continuation. And I want you to notice one thing that I'm doing with this. I'm not just drawing this line on it and taking a trade solely based off of one pivot. Just because it worked on NVIDIA doesn't mean that it has to work over here. The reason that there's a higher probability it does bounce over here is not just because of the line, it's because of the line and the flow that we saw intraday. If there was no bullish flow complementing this line over here that I just drew, then that's not a setup that I want to take. It's only one variable if it's just the line. It's only one variable if it's just the flow. You pair them together, that's two variables. Potential for more if you use something like Fibonacci, and you're looking at a much higher probability of success for a trade setup. That's the type of mindset you need to apply when trading with flow. The mindset of going on to the Cheddar Flow account, or even if you have access to Cheddar Flow and looking for a singular print, and I'll just go over, I'll say it again over here. Let's see back to Thursday. Let's look for a singular print order. This over here, AMD, yeah, it had a lot of premium behind it, but it's one print. We don't know anything about the technicals yet. We don't know if there's an indicator that you personally use that pairs well with it. It's just one print. It has a lot of premium, but I'm not adding this blindly because it has a lot of premium behind that. I just want to make that clear. It's not how trading works. Maybe it would have worked back in 2020, but everything went up during 2020. It's not the case now. So if you see something like this, that's great. It has a lot of premium. It's great that we've now seen two, because I believe there was one earlier in the session. Yeah, the one over here. But you need to go over to the chart. You need to look at other aspects to it. You need to apply. You need to find if there's risk, if there's good risk reward for this setup. All of those things, all those factors paired together make that robust trade thesis. And that's the mindset I'm trying to train you guys to have instead of just looking at one print by itself. So AVGO fits that in this case here. And we can even test other intraday technical analysis based concepts. For example, if we go to the 5-minute chart, we can see if there was a valid downtrend, and there was, in fact, a valid downtrend. These aren't as substantial as like a daily downtrend, but it still worked. In this case, you could see here, once it was consolidating after this high, or at least intraday high, it started to fall down. This automatically creates a downtrend, and then it finally broke above that downtrend over here. I never base an entry off the 5-minute, by the way. I'm just showing you the 5-minute chart for simplicity's sake here. But once it did break back above over here, we could wait for a 15-minute confirmation. Once that's applied, then you could add that position with risk under 213.95. And as long as it remains above that downtrend and 213.95, it's going to continue a lot higher. And it continued a lot higher for sure afterwards. So you can see here, even if you entered on that 15-minute close, which would be right around here at 217, still looked at the shares alone going 5% would be a lot more on the options, even with that heightened IV off of such a substantial move during the day. So this is an amazing day trade. This isn't even something that was a swing trade. It could certainly turn into it, especially when you have complementing flow like this AVGO print from back here, which I'll go back up to, this $2.5 million call. This was great to see. If you are somebody that was interested in swinging it, you could see 2:29 p.m. and I'm Central Time. So this was about 30 minutes before the close. A perfect trade example of this is if you added something for an intraday trade, maybe added a 1 to 2 week out contracts and you held on the way up, trimmed on the way up as well. Well, you would be comfortable holding overnight or over the weekend in this case, because there's a print like this over here, substantial amount of premium, very bullish overall, and it closed very bullish on the daily, closed with a lot of strength. There's a high likelihood it actually continues going into Monday or Tuesday of this week. That's a good risk strategy as well. You don't want to hold everything overnight if you initially wanted to just make it an intraday trade, but if you trimmed 1/3 or 2/3 going up into this, why not hold the runners going into the weekend? You could potentially see a gap up on Monday or Tuesday and then profit even more on those runners. So as for setup this week, there's a couple things I'm looking at. First of all, over here around 220, 221 is going to be a nice retest spot. The question is, will that be swingable? Part of this is going to come from the flow, and I'll just draw it out here to show you about 221. Retest of this is that prior high, of course, from Friday. So I expect it to be supportive, but is there going to be that complementing flow, kind of like what we saw on Friday? Will this continue to be the case on Monday? If so, we could be looking at a short squeeze candidate. Although you have to be careful, and I have to really say this and make sure you understand this, you have to be careful when something's up to about 25%. Even though it's well above where this previous range was, it doesn't mean it can't fall back into the gap, fall back to around 200, liquidity grab under 200, and then continue up higher from there. So it's going to be critical to use good risk reward in this case, which would entail looking at this 213.95 level, as well as the 221.01 level. I'd be looking for something like this. If Monday we see a open around this range somewhere up here, whether it gaps up or not, and we see some type of a retest of 221, I like this as an entry. Do need to be careful though. 15-minute close below 221. I would get out of that position as there's a higher likelihood it falls back to this 213.95 level. If it decides to bounce from here to get back above, then there's an entry on it reclaiming that 221 level. But I only want to trade this above 221, above here. I'm not interested in taking a rebid over 213.95. It already retested that level, that opening level I referenced earlier in this video. So this setup from over here already happened. It's gone. I'm not interested in a retest. It can for sure decide to bounce from there, but it's likely not going to reclaim 221 off a bounce. In my opinion, if it does, I'm willing to re-add it, like I said, but I'd expect something like a bounce from down here, maybe to like 218 or something, and then kind of chop around here and then break down. I'm not interested in that setup. What I'm interested in is only if it breaks down below and can reclaim 221, or it just doesn't break down below in the first place and it's able to bounce from 221 and continue a lot higher. This range, this kind of area, this pivot is the entry zone for me for this week, and can be pretty thin margin, all things considered, in terms of the risk, because I'd be using a 50-minute close below that level. As long as it stays above, though, it has continuation potential, has momentum, and that's all that I care about. That's the context of this setup. It's a momentum-based setup. Once the momentum is gone, which would mean it falls back into this, what would be now a previous range from before, then I'm not interested in trading it. You're looking at chop and a drawdown. I'm only interested in trading it when it's a very clear uptrend, when it's very clearly in a upwards momentum phase, as those can be very lucrative in the short term. We've seen that with tickers like NVIDIA. We've seen it with Tesla recently. Whenever they're in, and I'll just show you right now, whenever they're in that clear upward momentum, then you can trade them. And in the short term, again, can be super lucrative. Let's go over to present time for Tesla here. We could see once it did break out of this flag from over here, look at this breakout. Beautiful trend to the upside, that coiling energy like I spoke about earlier, just a lot shorter time frame than AVGO, had that breakout move and then just continuously has printed the upside. Really no pullback, all things considered, no correction by any means. It's just been continuous bid even higher. So that's the kind of setup that I'm looking for here. If it invalidates that, which would require under 221, again, not interested in that setup. Really need to make that clear here. Only like this above, and then it can continue a lot higher into the 230s, even 240 off of that momentum. So that's my plan for this week. Already a beautiful setup from Friday over here that we can certainly use in the future when we see a breakaway gap plus complementing flow, like I showed you here. But as for this week, looking for around 221, that momentum setup. Regardless, I'll see you guys next time.